The Indian stock market has just wrapped up its sixth consecutive week of losses, marking the longest losing streak since the 2020 crash. Both the Nifty 50 and Sensex closed in the red, with foreign investors pulling out at an alarming rate. What's driving this downturn? Rising global trade tensions are certainly a factor, alongside concerns about domestic economic growth. Major players like Reliance and HDFC Bank have seen significant declines, impacting overall market sentiment. As we navigate this turbulent phase, the question on everyone's mind is, what's next for our markets? Will we see a rebound, or are we in for more turbulence?
As of August 8th, the Nifty 50 closed at around 24,363, down about 0.8% for the week, while the Sensex ended at roughly 79,858, slipping close to 0.9%. This isn't just a minor dip. Both indices have been on a downward trend for 6 consecutive weeks. It's a stark reminder of the volatility we faced during the early pandemic years. Investors are feeling the pressure, and it raises questions about market stability. Are we heading into a prolonged slump, or is there a silver lining ahead? Only time will tell, but these trends definitely warrant our attention. The recent decision to double tariffs to 50% on select Indian exports is sending shockwaves through our economy. Sectors like textiles, metals, and auto parts are feeling the heat, and it's not just about trade, it's about jobs and livelihoods. Companies that relied on affordable imports are now scrambling to adjust, and investors are understandably rattled. This move could lead to higher prices for consumers and disrupt supply chains. It's a stark reminder of how interconnected our global economy is, and the ripple effects of these tariffs could be felt for years to come.
Foreign institutional investors, or FIIs, are making headlines by pulling out nearly Rs 50 billion from Indian markets in just one day. This massive sell-off is largely driven by rising U.S. yields and a stronger dollar, which are making Indian equities less appealing. Investors are shifting their focus to safer, higher-yielding assets in the U.S., leaving Indian stocks vulnerable. This trend raises questions about the future of our markets and the impact on local investors. As FIIs retreat, we need to consider how this will shape the investment landscape in India moving forward.
Weak corporate earnings are casting a shadow over the market. This Q1 earnings season has been a disappointment, especially for IT, pharma, and industrial sectors. Major players missed their targets, and it's hard not to feel the gloom settling in. Investors are on edge, wondering if this is a sign of a larger trend. With rising costs and shifting consumer demands, companies are struggling to keep up. It's a tough landscape out there, and the ripple effects could impact the economy for months to come. The question now is, how will these companies adapt to turn things around? Last week, IT and pharma stocks took a hit, slipping between 0.7% and 0.9%. The main culprits? Tariff exposure and some disappointing earnings reports. Investors are clearly feeling the pressure as these sectors grapple with rising costs and market uncertainties. It's a reminder of how interconnected our economy is. One sector's struggles can ripple through the entire market. As we navigate these challenges, keeping an eye on earnings and trade policies will be crucial for understanding the road ahead.
Mid-caps and small caps took a hit today, dropping between 1 and 1.4%. It's a tough market out there. Metals are feeling the pressure, largely due to fears about global demand. Investors are worried, and that's reflected in the numbers. On the flip side, energy stocks and PSU banks are holding up a bit better, showing some resilience amidst the chaos. It's a mixed bag. But those sectors are proving they can weather the storm, at least for now. Keep an eye on these trends. They could shape the market's next moves. Key support levels have been breached, and many analysts are predicting that bearish momentum could continue. Eyes are on mid-August for a potential reversal, but that hinges on whether foreign selling slows and global trade tensions ease. Meanwhile, gold prices have skyrocketed to a record Rs1 02,191 per 10 grams. This surge is a clear signal that investors are flocking to safe havens, highlighting the growing fear in the market. It's a tense time, and the next few weeks will be crucial in determining our financial landscape. 6 weeks of market decline have left many investors on edge, fueled by U.S. tariff escalations, significant foreign outflows, and disappointing earnings reports. The pressing question now is whether domestic buying and the resilience of certain sectors can reverse this trend. It's a critical moment for the markets, and while the outlook seems uncertain, there's always potential for recovery. Remember, this is general information, not financial advice. Always consult with a licensed advisor before making any investment decisions.